Morning, it is Monday, the 20th of April. My name's Alistair, and this is your weekly market update from Stable. So over the weekend, communications broke down between Iran and the US again. There was confusion around what the opening of the strait looked like. Both sides seem to be pulling in different directions, and there's a new envoy heading to Pakistan to continue the peace talks. But as we've said all along, and the market has said, it's a very fragile state of affairs. And as we've seen on the market open last night, the equity market moving lower, commodities higher, or specifically crude higher, gold down a little bit, US dollar a little bit stronger as well. So the same kind of patterns we've seen. A few other highlights from last week, been covered a bit already, but the IMF downgraded the UK's growth forecast. They really hammered Rachel Reeves and said that her tax attack was the most significant out of all the G7 nations. Been some interesting feedback from different airlines about how they're going to cope with the cost increase for kerosene. Virgin Atlantic have said that they already have about 60% of their fuel hedged at a lower rate for the year, but they've still continued to add fuel surcharges. Norse Airlines decided that they weren't going to hedge at all and have found themselves parking planes and removing flight routes from their schedules. And in terms of market data this week, quite a busy week. On Tuesday, we have a range of jobless data coming out of the UK. We have US retail sales. On Wednesday, there's UK inflation. And on Thursday, we have manufacturing and global services sentiment from both the UK and the US. Friday, we've got retail sales from the UK in the morning. In terms of rates, sterling dollar's back about 135. Euro dollar is trading at about 117.50, and sterling euro is hovering around that 115 mark. So another bumpy week, no doubt, ahead.